The business cap rate calculator, or BCRC, is the tool that you'll use to value a business. So as to the reason why you're valuing the business, may be a number of reasons. It may be that your clients are looking at, well, what's my business worth because I want to get ready for exit. It may be for a specific transactional purpose, a sell down of equity internally to a staff member. It could be to support a finance application with the bank, raising capital. There could be a number of reasons. What we're finding, one of the most popular reasons, is actually advisors and business owners working together to understand what's my business worth and how can I improve the value. In most cases, in actually engaging with your clients, you're going to use the value your business needs to solutions map. And as you know, within this map, there are a number of branches that enable you to work through and very clearly help your client understand what the importance is of understanding what is their business worth. You know, how does it compare to other businesses? And you know, we have the ability to do that through the benchmark model. So having completed the assessment process with your client and now having a formal engagement to do the valuation, there are a number of guide them with a copy of the risk and value driver assessment. And in a separate training session, video training session, we've gone through what that risk and value driver assessment involves. And that involves your client going through and actually completing the responses to the risk and value driver assessment, which is then input into the RAVDA software in your advisor platform to calculate a risk and value driver score. In addition to that, you are also going to be doing a financial assessment of the business. So let's sign in and quickly take you through the process for that. So we go to the website, we sign in. That takes us to the partner login page. And then to go to the business cap rate calculator, we're going to go to the menu, go to tools, and then click on the. Before I go there though, one of the things I do want to show you is the step-by-step guide to completing evaluation that's contained in the Advisor Resource Centre. So if we click on the Advisor Resource Centre here, and there is click-throughs to the Advisor Resource Centre right through the website, then you'll see there is online training, call scripts, everything you need to help you complete an engagement with the client. But specifically what I want to refer to here is the business cap rate calculator step-by-step guidance notes. So I suggest when you are completing valuations, particularly if it's your first one or two, download this document and follow it step-by-step so that you are making sure that you're ticking every box and following the process. It has a number of screenshots, as you can see. It shows you what you need to do, where you need to go, the information you need to collect, the assessment you need to complete from engagement, downloading the risk and value driver assessment, assessing the financials and adjusting them, normalising them, completing the RAVDA, inputting the RAVDA results to actually calculate a RAVDA score, so on and so forth. So in addition to this video, you can also download and follow the step-by-step guide, which I suggest is a great way to go for yourself or for other staff within your business that are completing evaluation. So back to the tools though. Let's go to tools, go to business cap rate calculator. You can go straight to the actual application if you're ready, if you are okay, if you know exactly what you need to do as far as data input, but you may go into the business cap rate calculator page first. So there's a product overview in here. There's a lot of supporting information. There's some really good valuation reports, which are in terms of make sure that you are producing reports that are in line with that guideline and that you're managing your risks. There are guidance notes to completing the various parts of the valuation. And this is where you also would have accessed your risk and value driver assessment. So let's assume that you have done that. You've sent your RAFTA out to your clients. It's been completed. You've done your risk and value driver assessment input. So what we're going to do now is we're going to go to the application. Okay, so we've signed into the business cap rate calculator. And what we're now going to do into the application is we're now going to enter our data and complete evaluation. So look, what I've done here is I'm going to call up a previously complete because it'll make it easier for this recording. So you can see what we've got here. This is the mining engineers case study we use for training. We've selected the industry, and again, it's very important to make sure when you're completing evaluation to select the correct industry. If you have previously completed a RAFTA, which you would have done online, then you would have automatically selected that. And you can go into the client down the bottom. So you can see down the very bottom of this page, we can actually select the previously completed risk and value driver assessments. So if I do that, and I select that, hit load, what it's doing is bringing that data in to the software. So it saves double keying. The only thing you need to enter is the estimate of owner's value, which we'll put in here as, excuse me, as $3 million. And if it's part of a group and you wanted to include this in a group, then the appropriate group code. Once we've done that, we hit next. And that then takes us through to the data entry screen where we enter our financials. Now, I'm going to go back because what I want to do is select one that we've previously completed so that I don't have to go through and complete all the data entry. I'm going to load up a previously completed valuation, hit next. And as you can see, the financial information has been entered for the last 3 years. Now, one of the things you can do, you can enter the data directly as I have done, as you can see here. You also now have the option of importing your client's financial information either from Xero, from Attaché, from Profit Optimizer, and from some of those other financial systems where we have built the data integration. So in the Advisor Resource Centre, there are data integration and import guides in there. So it will save you a lot of time if your client's information is already contained within that financial software. All you need to do then is just upload the file and import it into Bstar. So let's go on. We've input the financials for the last 3 years. In most cases, you will, however, you don't have to. You can use 1 year of data. The other thing that is also calculated, as you can see, is the free cash flow factor. So based on the information that I have input, the free cash flow factor has been calculated as 1.32. All I need to do now is confirm the inputs, hit next, and then I can input the other results. Now, the risk and value driver assessment score has already come through, and so has the free cash flow factor. So all I need to do now is confirm the cost of funds, which is 8%. So this business has debt. It's paying an average of 8% for it, and it's paying a tax rate of 30%. So all of the input has now been completed. I hit next. That takes me through to the confirming assumptions worksheet, so I can go through and make sure that everything I've put in is correct. If you wanted to, you could actually print and save this file as a PDF and save it to your client's file as well, just to confirm you've got that information on file. We hit confirm, and that then takes us through to where we can issue the statement. In addition to that, we've also got a click through to the supplementary information statement. Now, this is a statement that you need to complete. It can be completed online, as you'll see. It's a Word document, and this is if you are completing the valuation in terms of APES to complete this statement and put it on your client file to confirm that you have followed the guidelines. in relation to APS 225. Okay, what we're doing here though is we want to produce the valuation statement. So we click the cap rate valuation statement, and here we are. We've got our valuation. So let's go through what the statement shows you. First off, the client reference, whatever it is you may have put in there. We have the business cap rate, which is 4.04, and we have the value of the business. Now, what has calculated that is the weighted average notional EBIT of 865 multiplied by the cap rate of 4.04 gives us a value of 3.498 million. The four inputs into calculating that business capitalisation rate is the free cash flow of 1.32, cost of funds of 8%, the tax rate of 30%, and the risk and value driver assessment score of 9.7. So let's understand the correlation between those inputs and the cap rate. The free cash flow, the lower the free cash flow score, the stronger the cash flow. So if the free cash flow score was higher than 1.32, the cap rate would actually be lower. It would be a negative. That means the business actually has less working capital. The cost of funds, if the business has to pay more for its funding, then the business cap rate would be higher. If it was able to fund its business, cap rate would result in a lower number. If it was paying more tax, which means it had less cash to pay dividends, again, it would be a negative on the cap rate. And with the risk and value driver assessment, the higher the score, the lower the risk relates through the higher the cap rate. The lower the score, the lower the cap rate. The two areas that have the greatest impact on the business cap rate is the free cash flow factor and the risk and value driver assessment. And they are two areas that the business owner has substantial control over. And with the advisor's help, with your help, in particular, the risk and value driver score can be improved by running a better business. So that's where that RAVTA is really critical in helping you do that. The right-hand side of this statement is also important to understand because this statement is really an awareness document where you can help educate your client around not only what their business is worth, but that there is likely potential. So what this shows, if we have a look at the top bar chart, it shows the current value, it shows the comparison between owners and cap value, and then we've got the potential value. Now that potential, that red box, you can see the potential value of 914,000. That's actually, the model automatically calculates that. And that's what the model is saying. That is the potential value, additional value in your business. If you were to undertake a program of structured business planning and improvement, and if we just go down to this paragraph at the bottom here, it assumes that the business is able to improve its earnings, that's its profitability, by 12%. So if it's making 865,000, then another 12% on that. It's able to improve its risk and value driver score from 9.7 and able to improve its free cash flow by 0.05. So in this case here, that would mean improving it to 1.27. So it's just giving the advisor the opportunity to say, you may or may not be able to do all of that. You may be able to do less or better. What we can do though, is we can work with you to understand what is possible and actually run those numbers through the model to understand what the impact of change is. So this document, in addition to actually calculating the value, is actually a really important part of the education process that you can go through with your clients. So get comfortable with it and understand what the power and the information is within here that you can use when communicating the outputs to your client. So before we wrap this session up, I just want to go back to the calculator. So we'll go back up to the tools and show you what else you can do with the valuation, because we've now built in a what if functionality. So let's load up the valuation we've just completed. So let's go 12 months down the track. We can actually revalue the business. In a lot of cases, you may be wanting to revalue the business. So all you need to do is you put in a new name. So for example, that would be maybe Valuation 2014. You hit revaluation and it will take you through and enable you, it drops off the oldest year, enabling you to input financials and the information for the newest year. A very simple process. But there is also the what if valuation tab. So let's say, for example, that you wanted to value the business based around some changes. You may want to change the profitability, you may want to change the free cash flow, as we've just discussed. You may have redone a risk and value driver assessment, and you may want to change the risk and value driver score. So as a result of that, we put in the new name, and that then takes us through to the data entry screen where we can change the numbers. So, again, a great way of enabling us to work effectively with our clients around not only what their business is worth today, but what it can be worth in the future. Okay, so you've now completed the calculation and all of the data input. You may need to now prepare a valuation report. It may be a very simple, informal report, or it may be a very detailed valuation report that you need to complete. So, to help you do that and to make sure that you are complying with the guidelines around valuations, APES 225, what we've done is we've developed a couple of templates that you can use. You're obviously welcome to use your own templates if you've got those. If not, you're most welcome to use our template. So let's go back up to Tools, to the Business Cap Rate Calculator, click on here. And what we're now going to do is we're going to wind down and go to Valuation Reports. Click on that. And as you can see, we have some really, really important information. APES 225, we have a copy of those guidelines. We also have two valuation templates. One is a short form valuation report, and the other is a very, very detailed long form and formal valuation report. Both of those reports are in Word, they can be adapted, and information can be deleted and added to suit your client engagement and the purpose of your valuation. It is really important to make sure that you prepare your reports in terms of the guidelines that are out. I believe that the guidelines have been well put together, and particularly the references at the back of the document, the schematic and the examples, will really help you understand what you need to provide in terms of documentation and reporting when you're preparing a report to make sure that you are complying with the guidelines. So that's a quick run through on the Business Cap Rate Calculator, which you can use to value businesses. Once you've done that, you can prepare your reports, you can sit down with your clients, help them understand what their value is, help them understand what potential value there may be in their business, and obviously benchmark their value. Thanks for attending this session.